It is with a very warm heart that we welcome you to today's episode of Tax Matters. We wish all our Muslim compatriots happy Eid al-Fitr. We thank Almighty Allah for seeing you through this month of Ramadan, and may He grant you the recompense that you deserve. On today's episode of Tax Matters, we will be looking at the various efforts of the Federal Inland Revenue Service in making life easier for the taxpayer. And of course, you know that this is in several ways. Advertisements on radio, in newspapers, and on television, programs like this one, Tax Matters on TV, and programs on radio. There are also regular interfaces with stakeholders via workshops and seminars. And such was the case on the 30th of July, when the three arms of the Land Tax Office Oil and Gas in Lagos, that is the Oil and Gas Department of the Federal Inland Revenue Service, combined to hold a sensitization workshop for stakeholders on self-assessment and voluntary tax compliance. Now you know that full implementation of self-assessment is the rave of the moment, is the mantra, just as personal income tax, especially as there is a fresh amendment to the Personal Income Tax Act, which everyone is still digesting. And of course, you know that it is personal income tax that concerns everyone because it concerns our pockets. And so, the second event will be a workshop that was held in Abuja on the 2nd of August by the Individual and Enterprises Income Tax Department of the FIRS for ministries, departments, and agencies on their roles and duties as collecting agents for taxes on behalf of the government, especially deduction and remittance or pay as you earn from the salaries and emoluments of their employees. If time permits, we'll look at the third event, and that is with regard to ITAS, Integrated Tax Administration System, which seeks to make it possible for the taxpayer to perform his duties from step A to step Z in the confines of his living room or his office, just as you are receiving Tax Matters now in your living room. My name is Olumoyiwa Matuluko, and the program is Tax Matters.
We welcome our numerous taxpayers, auditors, the tax representatives, the tax consultants to this sensitization workshop, which is predicated on self-assessment compliance. Permit me to use this opportunity to intimate our taxpayers and other stakeholders seated here of the restructuring that took place in large tax office oil and gas very recently. One of the positive outcomes of our restructuring exercise was the recent creation of 3 offices out of the erstwhile oil and gas large tax office. The 3 offices are the large tax office oil and gas upstream, the large tax office oil and gas oil servicing, and the large tax office oil and gas downstream. We have a 4th office, large tax office oil and gas, located in Port Harcourt.
Mr. Ajayi Bamidele is the Director, Large Tax Department at the FIRS. He spoke on the theme, or if you like, the topic of the day, self-assessment.
The self-assessment system was introduced in the year 1992 by the federal government. The implementation of the concept was, however, discovered to be far below consensual ideology. All of us will agree that in the years past, we have been doing it and doing it as we thought it should be, which were not, until IMF came a few years back and told us that, guys, local, you are not doing it in the best international, in accordance to the best international practice.
That effectively set the tone for the main paper of the event, which was delivered by the project leader of the self-assessment team, Mr. C.N. Oyegbule.
Self-assessment, unlike government assessment, is the tax regime where the taxpayer has the responsibility to compute the tax, pay and file. Self-assessment is a partnership. It's a tax administration system that ensures that roles and responsibilities are shared. If you're a stakeholder, you probably understand the business better than the tax administrator. So you may not have to wait for him to issue an assessment because you keep your records. You know better what the profit, the actual profit, and that's why you have it this way. The first point, at the point of contact, you should have paid, not waiting for assessment to be raised. And that is why the self-assessment system doesn't feel comfortable with any payment made after due date. Because the payments were made after due date before now because you needed a notice of assessment. The tax authority is supposed to accept the returns as filed. That is because you are taking something from somebody who has equal share with you. Surely there will be checks and balances by way of audit, but then the audit allowed by self-assessment is risk-based audit. It has to be risk-based. Even before you get to proper auditing, you have to subject all the returns to risk assessment such that every case has an equal chance of being selected. If that is the case, then you're already building up a credibility around the tax system because it's not possible to say, yeah, I'm going to audit this person, I will audit that person. You're only going to audit because it's caught up by your risk assessment template and all that.
Mr. Oyegbulen thereafter proceeded to speak on the regulations on self-assessment issued in 2011.
Now on Regulation 18, the regulation still allows instrumental payment, but then you have to do that before due date in line with tenets of self-assessment, and only 3 installments are allowed. Let me preempt a question here. Some people have said, but CITA said the 6 installments. It didn't say you must grant the 6 installments. It said not more than 6, which means it could be 2, it could be 3, it could be 5. So that's why the board that has the power to grant that in the first instance has said, okay, let's harmonize and have only 3.
Mr. A.J. Adedeji presented a second paper on tax enforcement activities in self-assessment regime. Thereafter followed a robust interactive session.
I'd like to first and foremost thank the organizers of this event for a job well done. Information is power, and so we have it. If there was a failure, despite the incentive that was given to, number 1, pay 6 installments and have, I think, 1% discount for filing essential, I think it was a very laudable thing on the part of the government. But right now, it appears to me, I'm not sure, I tried to look at it, but it appears it's been removed. That incentive has not just been removed, the 6-month allowance has also been removed. I think the government should also encourage people not just to pay on the installments, but to also give better incentive to ensure compliance. When you get 1%, people didn't comply. Now you are removing the 1%, and you still want to enforce. I think we should find, rather than apply the stick and sanctions all the time, we should employ the carrots and the sticks. Thank you.
Having credit notes for withholding tax has become so ugly that we end up having issues with vendors who are serving us to the extent of insulting us in our offices. Reason being that the service is not releasing credit notes. And at the end of the day, it disturbs our operation. Please, when will you release all that are being remitted to you, that we are not going to have face-off with our vendors? Thank you.
You look in your records and you have massive withholding tax receivable amounts sitting there. And on June 30, you're telling your corporate treasury, I need over ₦1 billion in cash to pay tax because my tax returns won't be accepted if I don't show evidence of tax payments. So it's very difficult relating the two, telling them that you have these massive receivables sitting there and you have this requirement to pay this tax and have evidence to show that you paid the tax.
Before now, we used to have VAT input and output. And now we notice that FIRS has designated some companies, operators, especially the big joint venture partners, as collectors, whereby your output, VAT is deducted at source. And you still have to pay your input VAT. And there is no way you can now recoup the input. So many a times our clients are faced with these problems and they tell us they have paid and their output is deducted as source. What are they going to do about that?
Somebody has just commented on the issue of incentives. Well, the incentives were granted where it was necessary. Let me say that. In the incentives, it appears like MOU are no longer at ease. And I remember in a class, in a master's class, I've been asked, why should the MOU still stand? The conditions that brought about MOU, are they still on now? I said, no, they are not there again. Because the price of oil has gone as far as $200 from not less than $60 per barrel. In those days, it was 8 naira per barrel, I remember. So, to that extent, let us release from the issue of bonus.
Professor Omele took care of incentives. When something is mandatory, the incentive is removed. So I think it was just that.
Chineke me, they don't increase my salary money. No be mistake. Oga accountant do so. Papa Junior, you never hear of Peter. Now the new MD be that. Talk now.
Peter, na Personal Income Tax Amendment Act, where Mr. President just signed for law to better the life of them people. So them to go get more money to enjoy with them family. You see this amended act, they don't reduce the tax with the on top your salary money. They can't increase consolidated allowance money where we go to get every month. And you know, say, now the president will listen if you do better thing for the people.
Ah, Mr. President, you do well, oh. I'm blessing you, they think of me when you they sign this bitter. Now I feel do boku things this year. I feel rent shop for Mama Junior, buy textbook for Junior, send money go village, make the thing begin build my house.
So you say I'm the landlord?
Of course. Oh, you this is our country for you. Peter, oh, Peter, hey, Peter.
JTB created a tax-friendly environment.
Welcome back. We move on to the second story of the day, and that is the interactive session put together by the Individual and Enterprises Income Tax Department of the FIRS for ministries, departments, and agencies to sensitize them on their roles and responsibilities as tax collecting agents under the Personal Income Tax Amendment Act. It was held in Abuja on Thursday, the 2nd of August.
The sensitization workshop is a fallout of the signing into law of the Personal Income Tax Amendment Act of 2011 by Mr. President on the 14th of June 2011. And of course, even though we are assembling here to discuss the PITAM, we will use the opportunity to also discuss other issues affecting taxation generally. And we'll have the opportunity to even assess how well we fared in our relationship with the MDAs in the past 3 years.
The acting executive chairman of the Federal Inland Revenue Service, Alhaji Kabiru Mashi, was personally in attendance to underscore the importance of the workshop.
Since change is the only permanent thing in life, the Everest management continues to look for better ways of doing things in order to continuously improve the service delivery to taxpayers. Towards this end, management took the decision to segregate the taxpayers into large taxpayers, medium taxpayers, micro and small taxpayers, for taxpayers whose turnover threshold of 1 billion and above, for large tax office cases, 200 million to 999 million for MTO cases, and below 200 million for micro and small taxpayers, respectively. In addition, a new department called Individual and Enterprise Income Tax Department was established to administer the Personal Income Tax Act in the FCT for the benefit of Federal Capital Administration. It is this department that is organizing this sensitization workshop. The workshop will provide a unique opportunity for you to ask questions on any gray area of the amended law. You should feel free to ask questions and make this workshop as interactive as possible so that at the end of the program, we shall be better informed to discharge our responsibilities under the law.
Mr. Peter Olayemi is the Director, Individual and Enterprises Income Tax Department of the Federal Inland Revenue Service.
Prior to the amendments to the Act, there were a lot of shortcomings that people noted in the Act that was in operation at that time. So the President listened to the complaints of Nigerians and working in tandem with FRS and the National Assembly, the brand new Personal Income Tax Amendment Act was signed into law. Now, the first major amendment was in the area of imposition of tax and income chargeable. And the major amendment to that section of the law was the change of imposition to be replaced with the word collect. States, the personal income tax is a federal law. So states don't have powers to impose the law. What the states can do is just to implement the law and collect the taxes due as imposed by the federal law. The Amendment Act also introduced the concept of presumptive tax regime into the Nigerian tax system. Prior to the promulgation of that law or the enactment of the law, there was no provision for presumptive taxation. And you know, the major complaint of everybody in this country is that it is only people in employment that are paying tax. So this one has actually made it possible for the various tax administration to assess to tax people that are not in regular employment. Now, Section 81 has also been amended as follows. Every employers are required to file a return of all emoluments paid to its employees not later than 31st January of every year in respect of all its employees in the preceding year. Meaning that, you know, there is the obligation on all the MDAs to notify, to file a return which is due on or before 31st January of the following year of all emoluments paid to the employees, whether it is overtime or bonus or everything. You know, the import of this section is that, you know, at the beginning of the year, it is very certain that we will have known what happened to the employees in the previous year. So all the income already paid to our employees in the previous year must be aggregated and, forwarded in form of a return to the relevant tax authority.
Now, there are two different matters involved here. In the first instance, the employee or the self-employed person fills a Form A and files it before the 31st of March every year, stating his income, all his incomes, and then charging himself or herself to tax, which is now paid on a monthly basis. That is Form A. On the part of the employer, before the 31st of January every year, the employer is obliged under the Personal Income Tax Amendment Act to file returns on Form H, stating the activities of his or organization regarding deductions and remittance of personal income tax on all its employees in the preceding year.
There is a penalty for failure to do just that. The organization that fails to file that return will be liable to a penalty of about 500,000, while the individual responsible could also be liable to a fine of about 50,000 naira. Now, Section 85 of the Principal Act was amended to make it mandatory for MDAs and commercial banks to verify the genuineness of TCC by referring same to the issuing tax authority. And incidentally, it is this requirement that carried the highest penalty, which is 5 million or imprisonment for 3 years, or to both fine and imprisonment. It is because of the importance attached to this particular obligation. You know that there is a prevalence of fake TCC in the system, and then this law was actually passed to stem that in the bud. In FRS now, there is a department that handles that particular function. Once we send the request to that particular department, I'm sure within the space of about 2 or 3 days, that confirmation will be handled. So I want to implore us to do all that we need to do to ensure that we demand for tax clearance certificate from all the people that we are dealing with. And before you give effect or you use the tax clearance certificate, you should also confirm. But again, I want to also mention one point here. The tax clearance certificate is not just a paper, an ordinary paper. The main reason why the system is encouraging people or organizations to demand for TCC is to even look at the paper. We claim that in the last 1 year, the total job undertaking has run into about 200-300 million. But when you look at the TCC submitted, the TCC may have a turnover of 1 million or 2 million. Then how do you relate, the turnover on the TCC with the claim that the taxpayer is making? So the TCC should actually be something like a confirmatory document to actually confirm the claim of a prospective contractor.
Oga don come o. Tax man na you. Sit down. How long you thought say you go take bring the tax clearance certificate for me?
Oga, once you give me the money, the tax clearance certificate go ready now.
Now?
Yes, Oga.
Oga, wait, make I bring the money.
Wait. Agent for Federal Inland Revenue Service? This one a Wururu person. Come for here. Guy, forget all these Wururu people. Go any Federal Inland Revenue Service office where they near you. Go collect the original tax clearance certificate. To know the original tax clearance certificate, the tax certificate must get FIRS watermark. It go get signature on top of the FIRS seal, and the name of the tax office where they on top of the certificate must they correct. No print, no give, no even collect fake tax clearance certificate. FIRS don't want say anybody wey dem catch with fake tax clearance certificate, na jail straight.
For more information, visit www.firs.gov.ng or any FIRS office close to you. FIRS, it pays to pay your tax.
Like the interactive session that it was meant to be, there was a lively exchange of views between the tax collectors and the representatives of the ministries, departments, and agencies in attendance. That we would have loved to share with you today, but we are getting signals that it is time to move over for the next program. Time is up, but that is only for today. So you must join us next week on this same station, same day of the week, same time of the day for a fresh episode of Tax Matters. If you missed any part of this episode or you want to watch a previous episode of Tax Matters, visit our YouTube channel via your mobile device or on the web. You can also like our Facebook page or follow us on Twitter. Of course, we remain available via email and on voice telephone. We want to thank you most sincerely for watching. Have a good week ahead.